Are you thinking about retiring before you're 65? Do you live in the United States? If so, we all share a challenge, don't we? And that's, how are we going to get our health care insurance? Here in the US, obviously, our employers primarily are the ones that provide health care insurance for us. So if we leave work ahead of time, unless we have a deal with work where they're going to cover our health care insurance in retirement, or you're ex-military, we all face the same challenge, which is how are we going to get health care? It's a serious issue. The stakes are high, and it's probably the most common challenge that people under 65 face when they think about retiring. So let's go for a walk, and I'll share a couple thoughts on this that hopefully will be helpful. And the first one is just thinking through, where else can you get health insurance? What are your options? And I think most of us know about COBRA, right? It's when we leave our employer by law, if it's a U.S. employer, they have to offer us the ability to buy the same health care insurance that we had when we were an employee. But it tends to be expensive, just a heads up. It's not unusual for the COBRA cost of your insurance to be at least double what you were paying monthly. So it can be pretty expensive. And when I say expensive, I mean like $3,000 a month expensive, maybe even more than that. So it's something that your HR department could tell you. Of course, it's a little awkward if they don't know that you're leaving. But maybe you can call the insurance company and find out. And then the other thing is, it may qualify, although it's pretty rare that people would qualify into this, is in the U.S., if your medical expenses are over 7.5% of your income, and you itemize, you might be able to write it off as an expense. But not only is COBRA more expensive, but when you were an employee, you were likely paying your portion of the healthcare insurance in pre-tax dollars. But the challenge is on COBRA, most people are paying for that in after-tax dollars. So just a heads up, you want to be aware. Not only is it potentially expensive, but it's also not very tax-friendly for you. So that's a double out, but that tends to be one of the more popular ways that people get their health insurance, at least for a little bit. Okay, let's talk about the other options. I do want to share with you that I'm going to give you a total of 5 ideas and things to think about, and the last 2 are the ones that most retirees say, you know what, this made a difference. So be sure to stick around to the end, and if you're enjoying this video, do me a favor, take a second and hit the like button. Okay. Let's talk about number 2. We talked about COBRA, something that's I think now about a decade we've had is the healthcare insurance exchanges, which is the Affordable Care Act, ACA, also known as Obamacare. Now the healthcare exchanges vary by state, and I understand also within the state it can vary county by county. And the cost can vary dramatically based on the state that you're in. But there are exchanges, and people, I know people that part of their decision on where they chose to retire is based on the type of insurance options that they had in that state. They chose to retire in that state in part because of the health insurance choices that they had and the attractiveness and the affordability of it. Now, the nice thing about the healthcare exchanges is you might qualify for a subsidy. And you've heard me talk about the 3 bucket strategy in the past, where it's nice to have your money. It's nice to be able in retirement to control your taxable income. And the subsidy for the American Affordable Care Act, the healthcare exchanges, the subsidy is based on your taxable income. And so it's nice to be able to control what your taxable income is, so that you might qualify for a subsidy. And it can be super sensitive in some cases. If you make $75,000 a year, you may not qualify for a subsidy, but just as an example, if you make $60,000 a year, you might qualify for a subsidy. So that's another reason why you want to be able to control your taxable income in retirement. If you want to find out more about my 3-bucket strategy, I'll put a link to it up here. But let's keep going. I should mention that I'm not an accountant. I don't know your specific situation, so this is not financial advice for you. I can't give you financial advice because I don't know your situation. But I do suggest you look for a fee-only financial advisor to help you with this, or an accountant to help you think through it. And making sure you understand your health, how you're going to get your health care before you retire. The healthcare insurance is super important. So you do want to work with a professional. It's super important. Okay, the third one is there's something called health share plans. And this is not insurance. This is a group of people, they tend to be faith-based, that agree to share their medical expenses. And it's a little complicated. And you've got to be careful because the health share plans, in part because they're faith-based, are regulated very differently by the U.S. government than an insurance plan would be, right? You pay for insurance because when you need it, and you want to make sure that the company is financially solvent, is financially solid, and is doing well financially and has the reserves that it needs to help you when you need the help the most. And so the U.S. government has all kinds of rules and regulations for insurance companies. Actually, it's probably at the state level that's done. But the health share plans are private companies, and they don't have that same level of regulation. So it's something worth looking into, but just do your research on that. Okay, now I've got the two that can be very, very powerful. Before I get to the last two, hopefully you've been enjoying this video. If you have, give me a thumbs up. It really does help other people find this channel. If you haven't subscribed yet, think about subscribing. As the kids say, thumbs for likes and subs for love. Leave me a comment as well. Let me know about how the audio quality is. It's a little windy today, but I've got a muff over the mic, and hopefully that's helping. Okay, another way that retirees have found to be helpful to get healthcare insurance is just to do a part-time job. A part-time job that offers benefits. And if you're married, maybe you kind of tag team. 6 months out of the year, you have a job. The other 6 months, your other spouse has a job, but you work as little as you need to, because it's not necessarily about making the money, but it's about having access to the healthcare benefits. And, this is not a political channel, but I think it's a shame that it's so difficult for people to plan on healthcare insurance. And I don't care if you've got millions of dollars or if you have hundreds of thousands of dollars. The challenge is finding healthcare insurance is a challenge that we all face. Obviously, it's easier if you've got millions of dollars. But okay, so that's bonus number one. Bonus number two, you've heard me talk on this channel several times about traveling and what I call slow travel and visiting foreign countries, maybe renting out your house for a month, 3 months, or God forbid, even a year, and see what kind of adventures that opens up for you. Not only does it open and change things so that you have new adventures, but it also can open the door to having what's called expat healthcare insurance. There are companies that specialize in doing that, and because the U.S. healthcare system is so expensive, if you're living outside of the U.S., you can get healthcare insurance less expensively. It tends to be very affordable. Again, you want to do your homework, but there is insurance for expats. So if you're interested in living overseas, let's say you're 63 or 64, maybe you live overseas for a couple of years and you buy expat insurance, or you live overseas, and some countries will even let foreigners access their healthcare system. You want to do a lot of work on that. You want to make sure you're dealing with a specialist on that. So hopefully you found this video helpful. If you did, you're going to like this video over here that talks about health savings accounts. It can be a really powerful tax tool. Not only can it help provide funding for your healthcare insurance, it can be extremely tax advantaged, and it can be like a supercharged Roth. So can help with the healthcare as well, the healthcare costs, as well as be super tax efficient. So I hope you found this video helpful. Again, if you did, thumbs for like, subs for love, leave me a comment. And until next time, I'm Azul, encouraging you to take full advantage of the youth of your senior years. Remember, you're only young once. Let's use this time wisely.